Are mortgage rates increasing right now? You damn right they are. I'm going to give you the truth about the real estate market here in 2022. Before we hop into this video, if this is the first time you're checking out my channel, my name is Seanu Uyehara. I'm a branch manager with Loan Depot, helping you finance your homes all across the country. Whether you're buying your first house, your vacation home, or looking to build your real estate portfolio, we've got you covered. There's a link below in the description to help you get your mortgage right. And if you ever need a second opinion on your purchase or refinance, we've got you covered. You can always send me an email and my team will put together a free total cost analysis for you. And don't forget, if you love these videos, share this with a friend and subscribe to my channel because my team and I put out content every single week. And the goal is to help you get your mortgage right. Now, like I just asked, are mortgage rates increasing? And we all know for a fact that they have been going up. In fact, they've been going up so much and they've been so volatile. Every single day brings a new challenge. If you rewind the tape to January of 2022, according to Freddie Mac, the average interest rate was 3.45%. Fast forward to today, we are now shooting this video for you folks, mid-October 2022. Interest rates, I've seen some as high as 7.5%. Yes, you heard that right. 7.5%. Rates have more than doubled from the beginning of the year until now. In fact, the real estate market is still on somewhat of a tear. So many of you have expected the real estate market to actually crash, when in fact, the Review Journal, which is the local newspaper here in Las Vegas, actually put out an article last month about the September stats and said that the market actually plateaued and it cooled off. Now, they may just be putting these types of feel-good words out there to make you get off the fence. However, I have seen a handful of contracts that we have been personally closing where appraisals have been coming in above value and our clients are actually walking into instant equity in their homes, which is a good thing. As we shoot this video mid-October, I personally think that since the Fed is meeting another 2 more times by the end of the year, I think we will see 8% interest rates by the end of the year. I know some of you may disagree with me and say that we're going to see these lower interest rates. I just do not see how that's going to happen. Every expert out there has their prediction. So many people have said they're going to see 4% rates come back. I don't see that. I don't see how that's going to happen. Inflation is not slowing down. The economy is not getting better. Things are not getting better for anybody right now. So until we get that under wraps, I think interest rates are going to continue to go up. And I think we're definitely going to see 8% by the end of this year in 2022. In fact, where do you think interest rates are going to be by the end of the year? I would love to hear from you. So make sure to comment below because I want to know your feedback. With the rise of interest rates and whether the market continues to go up as far as values or cool off, like the Review Journal said, it has now made affordability that much tougher for the average person to look to purchase a home. The median home price here in Las Vegas is $450,000. That's a lot of money. That's a lot of house just to get your foot in the door. And I know for some of you, you might feel that you've missed the boat. However, if you're still interested in looking to buy, I think there are still opportunities that are out there. Like I mentioned, I'm seeing some of our clients get into homes that they're actually walking into equity. There was a house that we literally just got an appraisal back on where the client is walking into $25,000 of equity into that property before they even put their down payment down. In my opinion, they're getting a really good deal and the seller left some money on the table. So even though affordability is becoming tougher and tougher, this is where I think a good strategy is going to come into play. And for those of you that have been watching my channel for quite some time, you know that I'm really big on strategy over price. And I know some of you might say, I want the best interest rate. That's definitely doable and that's out there. However, the days of the 2 and 3% are gone. So if you are waiting for that to happen, I think you're going to be waiting possibly another lifetime for that to even come up. However, if you can look at other programs like a 2-1 buy down today, which has become increasingly popular, or even a 3-2-1 buy down, you can look at getting a lower below market rate for the first couple of years while you're in your house. Now, if you actually look at some of the other data and opinions of a lot of experts out there, I think it's safe to say that the majority of experts in the housing industry or in finance, they are predicting that interest rates will come down at some point. No doubt about it. We know that's going to happen. At what point? We don't know. However, if you were to say in the next 3 to maybe 4 or 5 years, interest rates are going to come down, this is a great program that you might want to look into because you can get a lower reduced payment. For example, let's say the rate today is 7% and you were looking at a 2-1 buy down. Year 1, you would get a 5% interest rate. Year 2, you get a 6% interest rate. And year 3, and for the remainder of the loan, you are now capped at 7%. You might think this is an adjustable rate mortgage, but it's not. It doesn't have all the mechanics of what an adjustable rate mortgage does. You are literally going from 5 to 6 to 7%, and it's not going to change. Now, if interest rates were to get better within that time frame, you can refinance and you can get out of that loan. That to me is a better strategy than waiting on the sidelines in hopes that the market will be in your favor whenever that time comes. I think having some of these programs come back, like the 3-2-1 buy down or 2-1 buy down, or even a 1-year buy down, those are other alternatives that you can look at to get your foot in the door in purchasing a home. Now, there's even some rumblings out there that they may even bring back a 40-year mortgage. Now, you have two sides of the coin on this. Some people love that idea because obviously if you now finance a home for 40 years, it will bring your payment down. And we don't necessarily need to have values coming down. Now, there's the other side where people say that that's going to be a horrible thing for the housing market and it's going to be horrible for clients. What do you think? Do you think that that would be a good idea to take out a 40-year loan and continue to pay that so you can get into a more affordable situation? I think it's a case-by-case scenario. However, if you do take a 40-year mortgage, you just have to know that you're paying on that thing for 40 years. However, you can always implement the pay down strategies like we've actually talked about on my channel. So you can actually watch that video to give you some ideas as to how to pay your house off faster. So that may be another alternative. I just think right now with the rise of interest rates, the rise of housing prices, so many things are out of whack, just totally out of whack. As a lender, we don't even know how the rates are going to react from day to day. I've literally seen swings of 0.5% on certain loan products from one day to the next. One of my words of advice to you, if you are looking to buy right now, I think you have to move quick. Quick in the sense of if you're in the process of your offer's already accepted and you're moving through the escrow portion, lock your rate as soon as you can. Don't gamble too much because it can swing one way or the other pretty drastically and pretty violently right now. You could literally lose the ability to qualify for a loan if your mortgage rate swings by 0.5%. So this is where, again, the strategy of how you're getting qualified, making sure that your loan officer doesn't max qualify you as far as your debt to income ratio, and you understanding where you qualify at. Are you at the higher end? Is there room in your pre-approval where interest rates move maybe 0.25%? Can you still qualify for the mortgage? Or does that knock you down maybe $20,000, $30,000, $40,000 in terms of your qualifying amount? There's so much negativity about the real estate market right now. You've seen that mortgage applications are down 60, 70%. You've seen that this is the highest that interest rates have been in over 20 years. We are starting to see all these firsts come back again as far as rates, payments, the housing cycle. It's moving right now. However, in that chaos, there is still opportunity. And I truly believe that you really get what you look for in life. If you look for the chaos, you look for the fact that I want the market to crash and I want all this negativity to happen, I think you will find that. And I think if you want to look for opportunities, and I'm not saying this because I'm in the industry, I'm saying it because I see our clients winning. So I'm making this statement based off of the fact that I have clients that are getting deals today. Your decision as to whether or not you buy a house is totally up to you. I'm making my statement based off of the clients that we work with all across the country that are winning today. And that's amazing to see that, because I know when I have conversations with them 3 or 4 or 5 years down the road, we're going to remember this time in the industry and say, was it worth it for you to buy that house? And I would imagine for the most part, they're going to say yes, because they are being a lot more cautious these days. People have more time and patience to purchase a home, despite what the media and everything else might be saying. My biggest concern isn't whether or not we have a crash, because honestly, if we have a crash, I got into the business in 2007, and during that crash, my entire book of business was investors. And if things were to go down, that would honestly be a great thing for all of us in the industry, because investors buy multiple properties. As a first-time home buyer, you're buying one house. You might refinance a couple years down the road, but when I think about the investors that I worked with back in the day, they would literally fly into Vegas for a weekend and they would purchase 3, 5, 10 properties at a time. So that would only benefit us in the sense that we would do a lot more business. So if the market goes down, Everyone in real estate is going to love that. However, you as a first-time home buyer, you may not like that because of the fact that all these investors with all this money is going to come back into the game, which is going to make your ability to find a house that much more tough. And I will always think about in the crash what happened and how many cash buyers were here in Las Vegas. Every month, the cash buyers would probably total anywhere from 50 to 60% of all the transactions that happen here in town. So as a first-time buyer, that makes it super hard for you to get into a house, because if the seller has to think about, do I want to help Joe, the first-time home buyer, or do I want to sell my house to Mr. Investor who's going to pay cash and close in a week? I'd rather take my cash and close in a week than wait for you to potentially close where your deal could fall apart in 30 to 45 days. So I don't think a market crash is beneficial to a first-time home buyer. And also, if that were to happen, I think interest rates would continue to go up. So if you don't like the sound of 7 or 7.5% today, I'm pretty sure you're not going to like the sound of 8, 9, or 10% interest rates. Like I said, my concern is not the crash. My concern is if there's a stagnation in the market. That's the thing that really concerns me, because the problem that we have with all the homeowners that have properties over the last few years is that you've either purchased or refinanced at a really low interest rate. So when you look at the market today, there is no real incentive for you to sell your house, because if you sold your house and let's say your interest rate was 2.5%, even if you made a ton of money on that house, your rate today is probably going to be in the 7s. So why would that benefit you to sell your home where you're comfortable with your payment? You probably got a lot of equity in the house, and now you're going to sell to buy into a market where you're going to be at a 7+% interest rate. That then will cause less people to put their house on the market, or they'll continue to take their maybe homes off the market if it doesn't sell in enough time. And now you have less volume in the market, which means things sit. And we can't have that as an industry, because if there's no homes to buy, even as a buyer, where are you going to go? And if that's the case, if you're a landlord, you're only going to do one thing but increase your rent. So I think we have to have some sort of movement between people wanting to sell and people wanting to buy. And you can even see this with new home builders. The new home builders were the biggest bullies in the last couple of years because they held the gold. The gold was inventory. They were building houses that people were lining up just to get hopefully a chance at getting their name called in these lotteries so that they could buy a house. But the builders are now looking at ways to offload their inventory, whether it's offering crazy incentives to you as a buyer, and they're even paying more and more commissions to buyer's agents to have agents come back to their properties to try to sell their homes. Or they're simply unloading these properties in bulk sales to Wall Street and hedge fund investors. They want to get rid of their inventory. In my opinion, we need movement in order for things to be somewhat normal. What we're dealing with today is the new norm. However, if sellers were to take their homes off the market, didn't sell, it would create another problem because there's less inventory, even though there's demand. And I think in our market here in Las Vegas, we have a big draw because we don't have any state income tax. So as inflation continues to go up and things get more and more expensive, we've had more clients that want to relocate here to Vegas simply for the fact that they're looking for ways to save money. Now remember, every real estate market across the country is going to react differently. Some markets might continue to go up. Some markets might take a bigger beating. It really depends locally on what's happening in that specific market. But I can tell you here in Las Vegas, we've had more and more people wanting to relocate here. In 2022, the market has gone completely bananas. The beginning of the year, everyone had great predictions. We didn't think there was going to be this big of a downturn, but the minute that interest rates skyrocketed and they more than doubled in the summertime, it really put a halt on everything. However, things are still moving along. Even though they might be moving slowly, people are still buying and people are still selling. You need to make sure more than ever in this market, if you're looking to buy or sell, you have the right strategy. You have to make sure you cross your T's and dot your I's. This isn't a market to make any knee-jerk reactions, because that can cost you tens of thousands of dollars by either selling or buying in this market. Make sure you do your homework. Make sure you have the right team by your side. And if you ever need a second opinion, that's what I'm here for. You can always shoot me an email and we can answer all your questions to make sure that you are on the right path. And if you don't know where to start, you can always check out this video right here so that way you can learn how to get your mortgage right. Thanks so much for watching, and I'll see you on the next video.